Welcome back, traders. Hopefully you squeezed in some solid weekend recharge without sweating the tape too much. Today delivered a powerhouse extension of Friday's record rally we hashed out last week, with SPY and QQQ smashing to new all-time highs on broad buying.
Yeah, really strong follow-through.
But, that Dallas Fed miss did inject a bit of a reality check on manufacturing's drag.
Adds a layer.
Tech's dominance has the bulls howling for more, yet small caps restraint, and XLB's brewing volatility remind us breakouts cut both ways. You're tuned into the Stock Market Summary series, and as you guys know, none of this is buying or selling advice. We're just here to provide market commentary and education, but, well, nothing we say here is financial advice. Okay, let's unpack this. We saw real conviction today. The S&P 500 SPY surged 1.18%.
Yeah.
And the NASDAQ 100 QQQ rocketed 1.78%, both hitting fresh all-time highs.
Huge moves.
Even the Dow DIA notched, 0.66%, also for a new peak?
Right. But what's fascinating here is the sheer top heaviness of the move. While the large caps were sprinting, the Russell 2000 index, IWM, your measure of small caps, only eked out like a modest 0.35% gain.
Barely moved, relatively speaking.
Exactly. It never even tagged its prior highs, keeping small caps firmly in what we'd call coiled watch mode. The market's breadth is definitely lagging the technical drive of the indices.
Okay, let's focus on some setups driving the enthusiasm. Our Grok Trade scans highlighted IGV, the software ETF, with a strong bull flag resolution holding firm.
Holding nicely.
And PLTR extended its recent consolidation snap higher. But the standout for me was Path. It powered through a bull pullback pattern on spiking volume.
Ah, yes. And that volume confirmation, that's such a critical nugget of trading wisdom, isn't it?
Totally.
Because it's also the difference between a head fake and, a true continuation. Seeing that volume spike provides real conviction to the chart pattern.
Exactly. And speaking of high tension, you have TSLA. It's just grinding in this tight, volatile sideways flag, now sitting just, 8% from its all-time highs?
Yeah, it's a real coiled spring.
Traders are absolutely glued to which direction that pattern resolves.
Yeah.
Pattern recognition and confirmation like this is precisely the type of technique we drill down on in the mentorship program.
Right. Now, if we pivot to sectors, the technology ETF, XLK, obviously led the charge. Stout 1.85% gain.
Big lead.
However, materials, XLB, was the sole outlier, really just hugging flat in a consolidation phase. It looks primed to unleash energy one way or the other, maybe reflecting that mixed manufacturing picture.
And that mixed picture brings us right back to the economic headwinds. The Dallas Fed Manufacturing Index clocked in at negative 5.0.
Yeah, missed consensus.
Signaling ongoing contraction and missing that consensus forecast of negative 2.
So this raises an important question, right? Why did the charts kind of overrule the weak headline today?
Good question. Momentum.
I think so. The technical drive, really fueled by that large cap momentum, was simply too powerful for a regional manufacturing miss to derail the whole thing. It serves as a good reality check, though. The fundamental environment might still be fragile beneath all this technical euphoria.
Right. Makes sense. As always, guys, if you've got a stock you're watching or a question about the markets, drop it in the comments. We might cover it in an upcoming episode. And by the way, if you're enjoying this deep dive and appreciate these market summaries, do us a big favor and hit that like button. It's totally free and helps us out in a big way. And click subscribe too, so you don't miss a beat. You can always unsubscribe later if you want.
Okay, shifting to broader markets for a sec. Bitcoin had some quiet resolve, ticking up maybe 0.18%, nearly clawed above its 50-day moving average. But what's crucial here, I think, is that buyers defended the 200-day floor like clockwork. That's a defined holding pattern in a broader consolidation.
Okay. And metals, though, they extended their profit-taking cool down.
Yeah, pulled back more.
The gold ETF, GLD, dropped 2.78%, and the silver ETF, SLV, was down 3.61%.
It looks like classic post-rally digestion, doesn't it?
It really does. We don't have a technical breakdown yet, but we're keeping our radar up for catalysts to maybe restart that upward grind.
Sessions like today, with these high-conviction setups like Path, the high-tension consolidation like TSLA, and these relentless eighth chases, they really underscore the core focus of sophisticated trading. You absolutely need pattern recognition, precise entry and exit timing, and, crucially, ironclad risk rules. That coaching support in the mentorship, it's aimed squarely at consistency, ensuring you can navigate these kinds of explosive environments safely.
Well said. So we chalk up today as index fireworks, mostly fueled by megacap tech with decent sector breadth overall, but just enough caution maybe from manufacturing to keep us sharp.
Which raises an important question for you, the listener. What's your take on TSLA's flag resolution or that XLB coil heading into tomorrow? Which one breaks first, do you think, and why?
Yeah, let us know your thoughts in the comments below. We'll break down tomorrow's market action fresh. Have a great rest of the day, and we'll catch you in tomorrow's market summary.